Per usual, everything on this channel for educational purposes only, is not intended as financial advice. Let's take a look at some legacy charts today for Macro Monday. Big week for economic data. We'll get to that. Lots of jobs data this week. Last week we had 3.4 billion globally on the inflow department, third largest weekly record. That's a big week after a slow start to the year, post Liberation Day. Most of that coming into BTC, of course, a little bit in Ethereum, XRP, SWI, and not much else. Coming out was Solana and US number one there on the flows department. Certainly the flows to watch and the flows that matter most of the time are going to be in the US. Looking at the 30-day cumulative flows, we have flipped green here. It's hard to see probably, but we've flipped green in Bitcoin terms, and we don't need or want 3 billion every week, right? We don't actually want that. We want a sustained bid in the market. That's best case. We don't want these huge swings that we're seeing in gold, right? Gold had 2 weeks prior, 3 weeks prior, had the best flows on record. And now last week it had the biggest outflow on record, depending on how you measure that, taking account inflation or ounces, whatever. It was a big notional value in outflows. We're still seeing tons of trading volumes on gold. This is Shanghai. There's a lot of like weird cross-border capital control, USDCNY versus USDCNH. All that is still going on, but the momentum in gold certainly has slowed down a bit. We also had the biggest inflow in treasuries last week. So a lot of the charts that we're seeing are at extremes. Bigger numbers than we've ever seen. Gold flows, treasury flows, Bitcoin flows are in that conversation, obviously. But even the manufacturing data, the PMI data, it's just at the floor. It's way below expectations. So it's going to take a minute to normalize what the tariffs are, what the effect's going to be in the market, and then, of course, how the market reacts to everything that's going on. Good news is, on the Bitcoin side, here in Kraken Pro, we're still above the daily cloud. And all we need to do is exist. We don't need to do anything else. We're not affected by earnings reports. We're not affected by tariffs. And if we make it through this week flat, that's a win. Even if we retrace into the cloud, I'm not too worried about it. This is going to take some time to normalize. This was a big level for months before we broke down. This is the yearly open here at around 94. So it's going to take some time to normalize everything. This is a huge move up and a huge move down, and it's just slowly reconsolidating at this level. For alts, what that most likely means is a tailwind generally, some bullishness generally, so long as BTC is above 90, let's say. Should BTC lose the 20-week again, slip down below to 87, the Kijun at 85, once we get in that territory, alts will get obliterated again. And they will probably make lower lows or extreme lows than they've made in a long time. So in altcoin land, you obviously don't want to see that. What I am seeing on lower time frames is a lot of head and shoulders energy. It's not so bad on the BTC chart. You can sort of see it. You know, there's shoulder, head, shoulder. This is bearish reversal. It looks worse on some charts on low time frames than it does BTC, but it's clearly there for BTC. So technicals along with everything else that's going on this week, it wouldn't surprise me to see some crazy volatility in BTC land. I think memes in general are still poised to do best just because they're down so much. Doge is still, this is the 4-hour Doge. You can see that head and shoulders there. Doge is still waiting to get into the cloud. This is the edge-to-edge waiting room, essentially waiting on that. And most charts look like this, where they are 1, 2, 3 weeks away from a real deal entry. No guarantees, obviously. And to be honest, the Bitcoin move was actually worst case for the edge-to-edge enjoyers, because what you wanted was a move in May from, let's say, 84 to 91, but instead what you got was a move slightly earlier. Now we'll take moves higher, great. But from a cloud entry perspective, you didn't get a great heads up on that. It just sort of happened all at once. SWI, same thing, just sort of happened all at once. You didn't really get a great entry unless you're paying attention to diagonals here. But SWI, BTC, consolidation slightly down, that's fine. We'll take that as a win. Most of these alts need a little bit more time. Solana's another one. It would not surprise me at all if we sort of snake our way down here and then like sneak into the cloud, and then we start to curl up and then we take off. Potentially May, June. So we look a lot better than we have for many, many months, but I still think we need some time. AVAX is another one that I keep looking at because it is right there, right? It is right there in the conversation for some sort of edge-to-edge play. I care not the ticker. I care about price position relative to cloud. So this week's going to be an absolute banger. That's what the kids say. On the economic data front, we've got jobs, we've got GDP, the first negative GDP potentially since 2022. Estimates here look like they're at a paltry 0.4%. I've seen some estimates as low as negative 0.2%. Atlanta GDP now is projecting a negative 2.5%. So the expectations here are all over the place. New York GDP is projecting a positive 2.5%. Here's PCE on Wednesday, an extra zero in that because why not? ISM, auto sales, we have NFP Friday. We've got QRA, the quarterly refunding announcement coming this week. We've got more Mag 7 earnings this week. So there are lots of reasons the market could find to get angry. Just any data print, right? Let's assume jobs comes down, unemployment goes up slightly. Let's assume mild weakness there. Let's assume PCE comes down to a respectable level. We still have tariff expectations for inflation to rise. We still have the Fed here on next meeting sitting at no cut, 92%. Depending on that GDP number, I'm guessing it's going to be around zero. I'm guessing. If it's way positive or way negative, that may change things a little bit. If the jobs numbers are screaming high unemployment, that may change things a little bit. But where we sit today, not really much in the expectations department. Now, if there is a number that moves the Fed's needle because of their blackout period, they will go to a journalist like Nick Timmerhouse and put out an article saying the Fed is ready to cut effectively, right? I doubt we'll see that, but that's where to look if something were to happen on the numbers. But right now, we're not expecting anything. Next meeting, we're expecting the first cut coming in June. They may talk about that in forward guidance. They may not. They may finally end QT. They may not. We'll see. Who knows what they're going to say because we're in the fog of war on the tariff front here as far as what that's going to look like for the rest of the year. But the market is currently expecting a series of cuts after the next meeting. Inflation looks fine still, just hovering here at 1.5%. This is below the Fed's 2% target. It is not CPI or PCE to be clear, but it should be a leading indicator for where things should go. Now, we don't have full tariffs just yet, but this is the first place to go. You know, we're seeing all these economists talk about inflation expectations. We're seeing surveys talk about inflation expectations. That's fine. Everybody can be concerned and worried, but until we see it in the numbers, I just can't be bothered. So yes, there's reasons to expect inflation. Maybe it's a one-time price hike. Maybe it's a continuous price hike. Maybe it's demand destruction and we get deflation. I don't know. But where we sit right now on the real-time data, we are at 1.54%. And on the Fed's own nowcast for CPI and PCE, we are seeing this continue to come down. Now, it's not coming down at a rapid clip anymore, but it is lower than the 2.4% from last month. This will get rounded up to 2.4 once we get this number, assuming it prints 2.35. So there'll be no change. I believe core is probably down. PCE is still coming down. This is the expected print for this month. Core PCE down slightly, not quite to the Fed's 2% target. And if they wanted to, they could use this as fuel to say, look, inflation expectations are high. We're expecting things to go higher. We're not at our 2% target yet. We're going to stay put and wait for better data. Certainly one angle they could take. Gas prices basically flat throughout the year, maybe up slightly, but down significantly over the past 4 years. Maybe a more concerning thing is we're seeing used car prices slightly tick up. But again, these data releases are all going to be colored by what's going on with tariff expectations and whether we're pulling forward some of that demand or not. This isn't screaming, but it's certainly curling up and a key input of CPI. We've also got the fertilizer index, which might be the scariest thing that we're seeing right now. We're continuing to make higher highs here in fertilizer. Now, that may not sound like much, but if food prices start to creep up again, then that will certainly work its way into inflation. You can see the pre-COVID level for fertilizer down here. This is the new post-COVID norm. You can see the crazy movement we had in 2022 with inflation. So to see this and think of this as maybe a leading indicator for what we may see going forward, certainly not bullish I would think if the Ukraine-Russia situation settles down, that would help this fertilizer price index based on the inputs that go in this. But we'll see. But this is not something you want to see if you're expecting inflation already to go higher with tariffs. And now we're going to see food prices rising as well. So not great on that front. This is the Atlanta Fed GDP now, which is estimating a negative 2.5%. Gold adjusted, still negative, I think negative 0.4%, as they say here. So the band of GDP expectations for this print is maybe the widest ever. I didn't realize this, but for COVID, the GDP print was a negative 28% during COVID. So it's not going to be that bad. But based on where we sat in the extreme drop, certainly the worst GDP print expectations in many years at this point. Is that priced in? What will the market think? Will BTC care? Will BTC get dragged down with this? Will there be talks of recession? Will the White House most assuredly deny the number or walk back some calculation and make their own calculation? I expect all that to happen. So be ready for that when that comes out this week. Something I'm keeping an eye on is reverse repo. Still sitting there at slightly under 100 billion. When this runs out, we have liquidity problems, most likely. So this would be one reason for the Fed to end QT if they want to get ahead of this. Not quite there yet. We're not to zero just yet, but it's one thing to keep in mind and watch. I just threw this on here because, of course, everybody's watching Bitcoin versus global liquidity. Global liquidity looks super bullish for BTC. It's easier to be bearish when global liquidity is declining. So although we may be flat down angry this week, the expectations are bullish continuation based on global liquidity. That's just what we've seen. We saw that pre-election, post-election. We saw it pre and post-inauguration. And I don't think there's any reason to think this is different. Gold has moved quite a bit. So many people have talked about that at this point. Looking at the yield curve, along with the unemployment rate down there, I wouldn't expect the unemployment rate to get anywhere close to 5% on this print. Maybe 4.4, but overall, this is still historically very, very low. Normally, when you see the yield curve uninverting like this, you do see a huge spike in unemployment. That's what the Fed obviously doesn't want to see, but we're nowhere close to that yet. We're rising, but we're nowhere close to that yet. Maybe the most troubling thing is the rate at which the 10-2 curve is uninverting. The next discussion to have and to think about is, okay, how big will that differential get? Could it get between 2%, 2.5% based on the extremes before things start to turn a corner if we go down the recession road? But where we stand right here, we look okay. We look okay with the expectation of some sort of recession coming up shortly. Also in the bond conversation is bank losses on their held to maturity assets. There was a big spike in losses last quarter as TLT went lower, and that's really what you can think of. The lower TLT goes, the angrier these held to maturity graphs will look. It's nowhere near SVB blow up levels, but it's not great. You know, it's not a good look when we're seeing this, plus all the debt that we're issuing, plus the lack of issuance on the long end. Certainly doesn't make a great case for bank stocks or anything at the long end. And if we look at the technicals for TLT, SHI, AG, IEF, it's no surprise that TLT is underperforming everything. And SHI continues to show strength. This is the 1 to 3 year ETF that looks good. AG sort of lagging there. That's the blend. But TLT is definitely still looking quite weak. It's not turbo bearish like it was in 2022, but it's certainly not at a place where I'd want to buy it, and not at a place where you'd expect bullish continuation. That chart is SHY. So still no bullishness to be found on the long end. As we migrate into a stonkery here, a lot of, again, interesting graphs, just extremes. We're seeing extreme blowout in first 100 days of past 4 presidential terms. Extreme negative for this term on Trump. We're seeing CapEx expectations just fall off a cliff. And a lot of this stuff is COVID-style pullback. You're seeing pullbacks in hiring. You're seeing pullbacks in spending. You're seeing pullbacks in anybody having any forward plans at all. Good news for crypto. We're still seeing dollar weakness. And just as we see that low time frame head and shoulders for crypto, we're seeing a low time frame inverted head and shoulders here for DXY. So it'll be interesting if DXY can break 98 and if crypto can negate all of its head and shoulders fractals on lower time frames. Doesn't need to happen. This is already an extreme move for the dollar. just something interesting to watch for the week with all of the economic data prints we will see. 10-year yield down to 4.22. That's a multi-week, maybe not a multi-week low, but a multi-day low, certainly. This is where we want it to be. I don't want to live in a world where we go to 5%, but I don't want to live in a world where we're just in the middle wondering if we're going to 5% either. So the closer this can get to 4%, the better. And it looks like we're trying to get there. Maybe with the QRA this week, this will move pretty violently depending on total issuance expectations. But risk assets certainly like this lower rather than higher. And we can add another graph to the pile of extremes. This is a negative 6 trillion year to date, according to Bank of America, on U.S. household equity holdings. That's a lot of trillions. So not great. And you could say, it's all unrealized, fine, but that does have wealth effects for people where they're looking at statements and they're more worried or concerned with retirement or what they have on their own balance sheet, and they're pulling back spending. And as they pull back spending, that has a ripple effect on everything in the economy. So just some data to chew on. I'm not one of these doomers that think we're going to go to zero in the US and it's over, but there is consequences to having whipsaws like this in all of this data. SPY technicals still need time. We're talking probably end of May, mid-June, first signs of life. Best case, maybe we print out some sort of inverted head and shoulders fractal here. You could argue a low time frame W. You're kind of seeing that on tech stuff. But down here, there's really nothing to do. And just as the SPY is turning lower, we're collecting tariffs. So is this going to go somewhere? Is this going to go to tariff stimmies? Maybe. I don't know. But in the grand scheme of things, this isn't extreme. It's just started, but it is at an all-time high. It'll be very interesting what this looks like at the end of the year relative to tax receipts. Because if you are collecting less in taxes and then not making it up with tariffs, what are we really doing here? We're taking one step forward and 10 steps back. Doesn't really make too much sense. Now you could argue, well, we're trying to correct decades of losing manufacturing. Fine. But we're not really going to help the deficit if we aren't collecting more in tariffs than we lost in tax revenue. There was a breadth signal last week known as the Zweig breadth thrust. There was also a super Zweig. You can see the forward performance there. It has a 100% hit rate 1 year later. And that's what people are pointing to. Sure, fine. I'll take it. Not something I'm going to trade on here, but very interesting to see this. There was also a breadth thrust in crypto, obviously, with alts waking up in a big, big way. So we're seeing this across the board in legacy land and in crypto. Triple Qs here maybe look a little bit better than the SPY, but there's nothing to do here for me. I want this to look like it did in September 2024. We're just not there yet. It's going to take 2 to 4 weeks, probably. Also saw this fractal again. This is NASDAQ compared to Netscape days. And there was just this analogy between ChatGPT and Netscape. So far, so good. We're lining up pretty interestingly for this fractal. Again, not something I'm trading on, but very interesting to see this type of thing comparatively between the two technologies. Mag 7 ETF looks just as bad as SPY and the Qs. Really nothing to do here. And I flip through them all. Maybe Tesla looks the bottomiest, but there's really no trades there that I can see. Really nothing to do on the Mag 7 front, on the semis front. Really nothing for me. This needs time. Really nothing to do. One of the better looking charts, probably Uber on high time frames, setting itself up for maybe an ascending triangle here, a multi-month ascending triangle, maybe a key level there at like 82, 83. Something to watch when a lot of these other charts are pointing down versus just holding their highs. We also got MSTR, of course, which is trying to claw back to the 400 region down today, but it's getting there. It's gaining ground. Looks okay. They've got earnings this week. It's possible Saylor announces another ATM, 21 million, something. Who knows, right? We'll see. We'll find out. I think his ATM is almost done. So the 21-21 plan that they put forth last year, half of that is done. So we'll see what he says on the ATM front this week. But on technicals, I still like this for a move higher eventually, sometime probably this quarter. It's not going to hit 800 this quarter, but maybe in Q4, decent level to watch down the road. Coin as well, setting up for maybe an inverted head and shoulders down here. Just needs time. Very similar to Total 2. Most alts are at this same place relative to their respective clouds. Just needs time to pattern out down there. Hood is another one. Maybe we get another move here. Maybe you get another bullish TK cross, price above cloud, bullish cloud like you did back here in September. That would be the entry. We are already starting to see that with Palantir. Palantir pulled up above that 100 level. I don't think I have the huevos to take this trade, but the cloud likes it if it can maintain this level. And maybe you get a better base later on, May, June. But it does look pretty decent. And something that looks awful is WGMI. Still need lots of time. Miners still not really the place to be. So overall, what do we want this week? For me, I just want flat. I'll take it. We probably see some volatility on all the data and numbers that are getting released, GDP, QRA, PCE. But if we can maintain nothingness for the week and set ourselves up for FOMC, then I think that's a win. That's all I got for this one today. Give me a like, dislike, comment, share, subscribe, and happy trading.